This is the briefing for Monday, April 15th. Well, we certainly got follow-through from the sell-off that occurred on Friday, and of course, we had some pretty big damage that was done to the market, not just price-wise, but internally as well. And that same thing happened, and I discussed it in the weekend briefing, the Friday briefing, that there was some internal damage done to the market. But what we've done today is probably even more damaging. Now, I'm going to take this thing from the short-term time frame initially up to the longer-term time frame because now we have transitioned from short-term rotational patterns into potentially a longer-term or at least an intermediate-term counter-trend rotation to the uptrend that we've been seeing for the last several months. Now, this is a 15-minute chart of the spiders, and this is a 15-minute chart of the Qs. Now, those of you who've been listening to these briefings for some time know that I have developed the several characteristics of counter-trend rotations. One of them is that they occur in three steps, and a lot of times the steps will have the first step equal to the third step in terms of price development. In this case, what I've done is I put a trend line up here, and I marked it reds just to distinguish it from key reference areas or support and resistance levels that I have on my chart. So it's pretty easy to see that this is one leg down, this is another leg up, and potentially a third leg down. Now, equality between legs 3 and 1 comes in at the 505.70. Let's call it the 506 area in the spiders. And you can see we've transitioned and traded through that. Now, these are not exact points. These are basically areas, as any support and resistance level is. It's an area. It's not an exact point. If I happen to get an exact point down and the market comes to that exact number, that is just luck on my part. But I look at these as areas. Now, in the area, short term, you can give it a little bit shorter development perspective. In the longer term, you can give it a little bit more leeway in terms of developing the areas for support and resistance. So in this case, this is where the projection would be, where there's equality between legs 3 and legs 1, and the same thing with the Qs. This comes in right around, I forgot what the number was, right around the 433 area, 432.70 area. In the Qs, and you can see we basically just traded slightly through that as well. So I think we're in that area, and this would suggest to me that if this is going to follow the rules of a counter trend rotation, not the change in terms of a change in trend, but this is counter trend to the longer term uptrend. Potentially, we could see some type of rotation back up in tomorrow's trading to potentially determine whether this is going to develop into a more complex counter-trend rotation, in which case this is a 1, 2, 3, this is a 1, then a 2 would develop, then another third leg down, where there would be equality between legs 1 and legs 3. But now I'm getting a little bit ahead of myself. So basically, breadth got to be fairly weak in today's trading. We did reach a point of being extremely oversold. And the most important thing is, you remember from the previous briefings, I've discussed this 510 area in the spiders. This is a daily chart in the spiders. And so that 510 area was where the first or the last higher low would be broken at 510. We came down and really tested it on Friday, but we broke through it in today's trading. Now the next level is 505, and that is the second lower high, which comes in right through this area here, and you can see we came right down and tested it. Potentially we could see some type of a bounce based on that testing, but right now the market is trading on news events, and if there's any bad news overnight, it does not preclude the market from continuing this downtrend that we saw in the last couple days of trading. 52-week highs minus 52-week lows continues to deteriorate. Breadth was fairly weak in today's trading. And volume, well, it's higher, but it ticked down from Friday's trading, which is a little bit interesting because we had more price deterioration in today's trading than we did in Friday's. In terms of the NASDAQ or the Qs, you can see this area right through here is the 434 area. We traded through that, so we've broken the last previous high, which was right through here. Next level would come in right around this low here, which is the 421.35 area, but I think this low here is going to be potentially more important, which comes in right around the 417 area as well as the next level of support. Now, keep in mind that resistance is now what was support, so 434 in the Qs, and then above that the 440 level in the Qs. So let me go back to the spiders. So resistance, an important resistance, is going to be 510, because if you compare this to the short-term chart, where this could be a 1, 2, 3 counter trend rotation complete, that would then suggest that this is complete, and potentially we're going to see another rotation back up again, and because this really has been a counter trend move to this move here. So watch 510 carefully. The next level above that is going to be 517, and then of course I think this is the 525. It must be 525 area as well. Moving on to the Russell, you can see we've broken out of this area of rotation, came down and tested 195, which was this next lower high. We traded below it, but then closed right at it. Next level of support is going to come in right around the 187 area, and then resistance, of course, important resistance in the Russell is the 200 area, and you can see breadth decline pretty dramatically in the Russell as well. Overbought and oversold, we're at an extreme in terms of the NASDAQ, not so much in terms of the NYSE, but this does not preclude the market from going lower tomorrow, but it does suggest that we are at a point where we can expect at least some type of counter trend rotation to work off some of this, especially in the NASDAQ, this oversold reading. Now, one thing to watch for in tomorrow's trading, and it's going to be very important, is if there is a lower low, and we close near the low of the day, which suggests the market potentially would have kept going lower tomorrow if it hadn't closed, is to watch for a divergence in market breadth. So it would mean a lower low below today's low and stronger breadth reading. That would then suggest potential for some type of rotation back to the upside. Now, keep in mind, either this is a 1, 2, 3 complete and we're headed back up, or this is a 1, 2, 3 complete now developing into a more complex counter trend rotation, which would suggest a second wave that would work off this oversold condition before we see a third move back to the downside. If we happen to gap down tomorrow, and breadth was negative today, it was fairly negative, but not extremely negative. If we gap down tomorrow and breadth is weaker than it was in today's trading, that would lead me to believe that the probabilities are beginning to increase that this is not a counter trend move, but this is a change in the trend. So we'll be discussing that in tomorrow's trading. So how the market reacts to the price development in today's trading tomorrow is going to be very important for determining whether this is done and we're headed back up, or this is developing into a more complex counter trend rotation, or this is a completely change of trend, and we're going to begin to see very impulsive selling in the coming days and potentially weeks. Have a great night, and I will pick this back up again tomorrow.